In this video, traders, we're going to look at mean reversion trading strategy ideas. Stay tuned. Hey traders, a very warm welcome to you. Okay, so mean reversion trading is kind of the sort of thing that a lot of hedge funds like to do, and it basically means exactly what it says on the tin. If you've got a mean, and actually that's an arbitrary mean, that could be anything really, but it's kind of an average basically, but people use different benchmarks for mean is what I'm trying to say. Any excursion away from the mean, traders are looking to short stocks that have gone too high away from the means, come back in, and buy stocks that have gone low away from the means to the downside to come back in. So they're thinking there's always going to be this sine wave type trade, even if it generally isn't with an uptrend or a downtrend. Things will always revert to the mean, whatever you kind of benchmark the mean as, whether that's a VWAP, whether it's a moving average, whatever it may be. Anyway, let's look at a couple of ideas that I've picked out for you. Okay, so if you're swing trading, one idea is to short the highest 3-day gainers, so percentage gainers. Now listen, you're not going to do that with every single stock. We're going to have a basket of stocks, maybe in the NASDAQ 100, maybe in the FTSE 100, maybe in a similar basket. We're not going to take kind of biotechs in one hand and this and the other and get complete no correlation. You need some reasonable size stocks so you're not trading against, crazy moves. So short the highest 3-day gainers and long the highest 3-day losers, or the lowest losers, however you want to package it. But you know what I'm saying. 3-day percentage gainers, 3-day percentage losers, you're buying a basket of those or one or two, shorting a basket of those or one or two of those, or even just one, and then you're waiting for them to kind of come back in line. The theory being that the highest gainers are too stretched and they will mean revert. The lowest losers, or the biggest losers, should I say, are too far again, and they will mean revert. They're too stretched. That's the theory. And the theory is if you do it with enough stocks, you're going to get that mean reversion effect. And even if you don't, hopefully, even if the market moves up in one direction, you're kind of market neutral, you're still expecting the kind of contraction between the two. So that's one way of doing it. You can do it with a 1-day gainer, you can do it with a week gainer. You can kind of play around with it and have a test. Go on finviz.com and check it out for yourself. Start to mark down some of the winners, some of the losers, maybe split it into different sectors as well. So you can focus on tech, or you can focus on utilities or financials or whatever it may be. Even if you go into something, even very specific like steel stocks or internet stocks or whatever it may be, something where there's maybe some sort of correlation, then just playing that type of trading strategy. 3-day gainers, maybe going further out if you're looking for a longer swing trade. Obviously 3-day gainers is going to give you that kind of 1 or 2 day, hopefully that's the idea, kind of stretch back to the mean or push back to the mean. Anything longer than that, you'll probably have a longer time frame. Okay, so what else have we got? Number 2, day trading. This is something you can do as a day trader. Same kind of thing, either a basket of stocks or 1 or 2 in your watch list. Shorting stocks that are up, or should I say, we go plus, it'll be easier to say, but you'll see what I mean in a second. Shorting stocks that are 1.5 times their ATR up. So their daily ATR, you can use a kind of 14 period or something like that. That's normally the kind of default. So 1.5 times up the ATR on the day. You could use 1, you could use 2. This is flexible, just some ideas for you. 1.5 times, so let's say the average range is normally 100 points, so it wouldn't be on stock, but let's say it's 100 points and it's up 150, then we're going to look to short that or put it in the basket of stocks that we're going to short, and then flip it on its head. Any stock was down more than 1.5 times the ATR, we're going to go long. So again, the basket or a couple in your watch list, and wait for that mean reversion. Theory being the same kind of stuff. They're both stretched, you're taking both sides, you're waiting for them to ping back together. Another way you could do, which I haven't got on here, intraday. If you want to trade intraday, in fact, you can do it for swing trade. Well, this one you can do for swing trade. Distance away from a moving average. So have a benchmark moving average, 20 periods, not a bad benchmark. 100 and 200 starts getting into longer term stuff. Sure, you can do that if that's your thing. But if we're looking at kind of shorter term things, maybe you can do stuff away from a 20 if you want to go really, really short term, maybe a 5 or a 10, something like that. Have a play around. Again, stuff that's really far away one side, really far away the other, looking for the kind of conversion back into the mean. Intraday, use a VWAP. So a volume weighted average price gives you that's a really good benchmark mean that everyone's looking at. A serious excursion away from that, multiple standard deviations away from that, we're going short. Multiple standard deviations away from that to the downside, going long. couple of stocks or a basket of stocks, however you want to play it, looking for that mean reversion back to the middle intraday. And the good thing about obviously being a day trader is at the end of the day, regardless of what happens, you close it, you're done, you're dusted. It's either worked, it hasn't, and the end of the day is the close, and that's it. And you can kind of test that a little bit easier as well on a day trade basis. All right, guys, there's some ideas for mean reversion trading, mean reversion trading strategy ideas. Any more you guys have got, stick them in the comment section below. I know there are literally thousands and thousands of them, but it's just some to be playing with to kind of build a foundation with, and perhaps you use in your own trading, or we'll have a little test and a little look and see how they might perform. All right, guys, see you next one. Take care. Keep the risk managed. Thumbs if you like this kind of stuff. See you later. Bye.